Hey everyone, welcome back to Corporate Decoder. Today we're diving into the money market world, and let's just say this report is about to tell us who's really jingling all the way to the bank with those sweet government-backed assets. So what we've got here is the annual report for the Lord Abbett US government and government-sponsored enterprises money market fund. Think of it like a yearly checkup for a fund that aims to keep your cash safe and sound, mostly by investing in very stable government-related stuff. They give us a peek behind the curtain to see exactly what's happening with their investments and how they're performing. First off, let's talk about costs. For every $10,000 you might have invested, the fund's expenses worked out to be just $28. That's a teeny tiny 0.27%. Honestly, for a money market fund, this is pretty much perfectly in line with expectations. They're keeping fees super low, which is exactly what you want when your main goal is just to preserve your capital and earn a bit of interest without taking on big risks. Now, for some of the really juicy numbers, as of June 30, 25, this fund was managing a massive 1,443,937. That's over $1.4 billion, wowzers. They've got 15 different investments in their portfolio. The total advisory fees paid out to manage all this money amounted to $1,920.99. And the interesting part, their weighted average maturity and weighted average life of investments are both sitting at a nice short 44 days. This means the fund's investments are short-term, which makes them less after after fees. Paid out to manage all this money amounted to $1,902.99, and the interesting part, their weighted average maturity and weighted average life of investments are both sitting at a nice short 44 days. This means the fund's investments are short-term, which makes them less sensitive to interest rate changes, and generally safer, fitting right in with the money market objective. Let's break down where those investments mature. A huge chunk. 55.6% is set to mature in 1 to 30 days. Then another solid 34.8% is looking at 61 to 90 days. And lastly, a smaller 9.6% is looking at 61 to 90 days. And lastly, a smaller 9.6% is in the 91 to 180 day range. What this shows us is that the fund is keeping its money really short term. This is a key characteristic of money market funds, aiming for maximum liquidity and stability. It means more than half of their portfolio will be back in cash or reinvested within a month, which is fantastic for managing redemptions and adapting to market conditions. Interestingly, for the period they're reporting on, there were no major changes to the fund itself. This suggests a steady hand at the wheel, maintaining the established investment strategy without any significant shifts. Now, the report breaks things down by different types of shares investors can buy, like Class A, Class C, and Class I. For Class A shares, the ticker is LACXX. Then we have Class C shares, ticker LCCXX. And finally, Class I shares, ticker LACXX. While the specific costs and performance metrics might vary slightly for each share class depending on fees and distribution expenses, the core investments and overall strategy of the fund remain the same across all of them. For this report, each of these classes had a hypothetical $10,000 investment cost of $28, or a 0.27%, which, as we saw, puts them right in the sweet spot for USI, puts them right in the sweet spot for this type of fund. Let's dig into the actual investments. This is where we see what the money is actually doing. They have 24.24% invested in government-sponsored enterprises, or GSEs. Think of these as government-backed companies that help provide funding for housing and agriculture. For example, they hold Federal Home Loan Bank discount notes maturing in July and September 2025, and Federal National Mortgage Association discount notes maturing in July 2025, and Federal National Mortgage Association discount notes maturing in July 2025. These are all high-quality, short-term debt instruments. A big chunk, over half at 50.71%, is in US Treasury obligations. This is the gold standard of safe investments, essentially loans to the US government. They've got US Treasury bills lined up to mature in July, September, and October of 2025. This is the core of what makes a government money market fund so stable. Then we see 25.12% in repurchase agreements. Now, a repurchase agreement, or repo, is like a short-term loan collateralized by securities. They're lending money out and getting US Treasury notes and bonds as collateral. For instance, they have a repurchase agreement maturing July 1st, 2025 with Barclays Capital, secured by US Treasury notes. These are usually very safe short-term transactions. Combined, all these investments and repurchase agreements make up 107% of their holdings. This slight overage is likely due to accrued interest or the way they account for these transactions. The key takeaway here is that the fund is heavily weighted towards extremely safe short-term US government and government-sponsored enterprise debt, with a touch of repurchase agreements providing a bit of extra yield, all backed by government securities. Looking at the balance sheet, the statement of assets and liabilities gives us a snapshot of what the fund owns and owes on June 30, 2025. They have over 1.4 billion in net assets, which aligns with the statistics we saw earlier. Total liabilities are relatively small at around $8.7 million, which is a tiny fraction of their total assets. This really highlights the fund's strong financial position and low debt. The statement of operations shows us how the fund made and spent money over the year. They earned $58.8 million in investment income, primarily from interest. On the expense side, management fees and administration costs are the main drivers, totaling a little over $38 million. This resulted in a net investment income of over $55 million for the year. That's pretty good. The statements of changes in net assets really show the flow of money in and out of the fund. For the year ending June 30, 2025, they saw a significant increase in net assets from operations, bringing in over $55 million. They also had a massive inflow from capital share transactions, which is basically new money coming in from investors buying shares. They sold over $350 billion in shares, reacquired, meaning people redeeming their investments. This resulted in a net increase in net assets of over $351 million for the year. The total net assets grew substantially from about $1.09 billion to $1.44 billion in just 1 year. The financial highlights provide a per share view, which is super helpful for understanding the performance from an investor's perspective. For Class A, C, and I shares, the net asset value at the beginning and end of the year was a consistent 1.0 NZs. This is the benchmark for money market funds, aiming to always stay at 1.00 A's, stay at 1.0. And this is the benchmark for money market funds, aiming to always stay at 1.0 AC at 1.80 lane mark. Looking at the ratios to average net assets, the total return for Class A shares was 4.49%. For Class C, it was also 4.49%, and for Class I, it was 4.58%. These are strong returns for a money market fund and are directly related to the yields we saw on their investments. The total expense ratio after waivers was a very low 0.27% for Class A and C, and also 0.27% for Class A and C, and also 0.27% for Class I. This again confirms that the fund is very efficiently managed from a cost perspective. They also have a report from their auditor, Deloitte & Toussell. They've audited the fund's financial statements and confirmed that they present fairly the financial position and results of operations in accordance with accounting principles generally accepted in the United States of America. This is a clean audit opinion, which is exactly what you want to see. It means an independent third party has vetted the numbers and found them to be accurate. They also mentioned that they've been the auditor for the Lord Abbett family of funds since back in 1932, which suggests a long-standing and stable relationship. The report details the board's annual review and approval of the investment advisory contract with Lord Abbett. They looked at investment performance, comparing it to peer funds and benchmarks, and while the fund's performance was a bit below the median in some longer periods, the board considered the nature of the fund and its peers. Expense ratios were also scrutinized, and it was noted that the fund's expenses were below the median for its peer group. They also analysed Lord Abbett's profitability and economies of scale, concluding that the management fees and overall profitability were reasonable and that shareholders were benefiting from cost efficiencies. Overall, this report paints a picture of a very stable and well-managed money market fund. The investments are heavily concentrated in ultra-safe US Treasury obligations and government-sponsored enterprises with a short maturity profile. This strategy is designed for capital preservation and liquidity, and the fund seems to be executing it effectively. The growth in assets from new investor money and decent returns from their investments is a positive sign. The low expense ratios and clean audit opinion further bolster confidence. The main risk, as with any money market fund, is always interest rate sensitivity and credit risk. But by sticking to US government and GSE-backed securities, they're minimizing those external threats to an extent. The fund's direction seems to be a continuation of its established conservative strategy, which is exactly what investors in this type of fund are looking for. The significant inflows suggest a healthy investor confidence in Lord Abbett's management of these stable assets. Alright, that's our deep dive into the Lord Abbett US Government and Government-Sponsored Enterprises Money Market Fund's annual report. What do you think about their conservative yet effective strategy? Did any of these numbers surprise you? Let me know in the comments below. If you found this breakdown helpful, please smash that like button and subscribe to Corporate Decoder for more financial document dissections. And hey, join our Discord community as well. You'll find the link in the description for more insider discussions. Thanks for watching, and I'll catch you in the next one.